hey, if I'm a betting man, I'm still 60-40 on the 4-year cycle. But diminishing returns, like Calvin just said, and diminishing losses, right? So,
Right, exactly.
80%, yeah, that was the 2018 drawdown.
The volatility is decreasing.
Yeah, right. And so 2022, we saw a 70% drawdown on Bitcoin. If we do get another traditional bear market, I see 60%.
Yeah, 50, 60.
Right. And then here's the thing about that. Once you start doing that, okay, look, here's where this all starts to get really tricky. Once you start doing that, then it does dick around with the timing. Like it does, because a 50% dip, well, we got that during the May crash in 2021.
Yep.
Do you call that a bear market? And then how long does it take to recover from a 50% dip? You're going to recover from those dips faster than you recover from a 70 or 80% dip, which is part of what contributes to a multi-year bear market. Is it takes longer to recover from that.
Yes.
So if you have a 50% dip, it's going to take less time to recover from that, and then it's going to dick with the timing of the cycles. Like you're going to have smaller cycles within the 4-year cycle.
Let's say it's like as we're going down, it's kind of rhyming and kind of going sideways, but as you go sideways and sideways and sideways, pretty soon you're so far apart, you're completely different than how you originally were. It's been a slow fog of water, a slow transition, and you saw it coming, but you didn't know how to interpret it.
Yeah, nobody was zoomed out looking at the macro. One of my favorite things that I read recently, and I've always pointed this out, the downside is always huge, very long-lasting downside, and then the upside is like a little, just like a week, a month, if that, while the rest of it's like multi-year downtrend. And I saw the statistic. It's like if you miss 11 of the best performing days in the S&P 500, you would have 50% less returns, positive returns.
Wow.
So you literally miss like half of the gains just by missing 11 of the best days.
If you remove 10 days of the most bullish price action from every Bitcoin cycle, Bitcoin actually has a negative return year over year.
Wow. Yeah, that's all it takes, man. That's why the whole DCA, time in the market, is better than timing the market. Because what are the odds that you nail that what even percentage of a year is that?
Oh, it's better to DCA in solid projects that you think will be around 10 years than it is to try to catch a lottery ticket, because you have two big problems with that. And I can speak personally on this issue that it's hard to let go of your coin, especially if your favorite, I mean, look at you guys at Cardano. I mean, he's wearing Cardano merch, and you have Cardano everything with your snicks. I mean, are you going to be willing to part with it in 2 months?
I was actually talking about this. Somebody asked this on stream if I'm going to fully exit, and I don't think I'm ever going to fully exit. I think that would be silly, because if the market keeps running and I have nothing, that sucks. It's going to mess with me mentally, and I don't want to go through that. That's stupid. So I have plans. I have dollar amounts. I have it's very vague. Like I don't have anything concrete, but I have an exit strategy concept. And but I'm never going to fully be completely unexposed. I think that would be insanity.